All right, everyone. So today we're going to discuss, as you can see on your screens, when you should be interested in a trade. Um, so the point of making this video today is to give you a checklist of where you bring everything together, and while you trade, so you have to um, check on if it is following everything that you've been practicing or that you've set up as your strategy, or whatever you want to call it, right? So there's, as we've discussed before, that it's not just one thing, it's a combination of multiple things that, when come together, come out as a trading strategy, right? There are a lot of strategies out there. You have support equals resistance, you have breakout or break and test or whatever, right? There are multiple strategies out there. Um, we do not have a specific name for what we do, because we just follow the price action, right? The general definition of price action, I'm not sure if we've talked about this earlier or not. It's people are of the idea that the candlestick patterns are price action, right? You make a doji, it's a price action. You um, make a hammer, it's price action. You make an inverted hammer, it's price action. But how I understand price action and how I put it out there is, um, any action that price is taking is price action, right? So the price action is there for you to try and figure out, based on the past receipts of what the bigger players have done in the industry, what the sharks have been doing so far. You look at that data, and then you try and figure out what you want to do based on that data. So whatever that data has done before, or whatever it's doing in real time, is price action. That is price taking an action, right? Okay, so let's get into it. I'm gonna type everything down here for you guys so that you have, a quick checklist that you can go through while you're trading, right? So first of all, what we have to determine is the state of the market. Okay, so I'm going to keep it like this for now because there are other things that I have to mention. So once we're done with all the things, you'll have a complete list of what you should look for, and what you should avoid, right? Okay, so to begin with, the state of the market. As we know that there are, as we've discussed in the previous videos, that there are, at any given time, there are three stages of the market, three states of the market, right? At any given time, the market's going to be in either one of those states. It's either going to be in a range, it's either going to be in a channel, or it's going to be in a trend. So what obviously we are looking for is, it has to be in a trend, right? The price has to be making either higher highs and higher lows, or it has to be making lower highs and lower lows, right? So once you've figured out that any given pair, let's say we talk about New Zealand dollar, US dollar here. Once you've determined that it's in an uptrend or in a downtrend, the next thing that you want to determine is, you want to mark the territory, right? You want to mark. Let's say we're talking about the uptrend as of right now, right? So you want to mark the latest up move on your higher time frame, that is 60 minutes. You want to determine what the territory is, what the playing field is, what are you looking at for the price to remain inside for a specific period of time. As so you mark that bigger time frames buyer, where the buy started from, where it went to, right? One move on 60 minutes. And once you've determined that, the next thing that you're gonna keep an eye on is the pullback. As we're talking about buys right now, so okay, let's forget that. Let's say that in a buy, the pullback is going to be lower high and lower low, whereas in a sell, the pullback is going to be higher high and higher low, right? So you higher high and higher low. Okay, so at this point in time, you're just sitting on your hands waiting for the price to come to an important area of reaction, right? So you're watching the pullback come in, and you want to keep an eye on important area of reaction, or we can also, well, there is this name in the industry going on for this stuff as point of interest, right? Point of interest. This is not my term. The term has been taken from the industry. Point of interest, or important areas of reaction, as we have discussed before, the areas of supply or demand, the areas where money is stuck, right? Where in a buy, someone sells and immediately the price goes against them, right? So those are the important areas of interest. So you want your pullback, that is either a higher high or a higher low, to come to an important area first. That is the first thing. Okay, after you've determined the state of the market, you found your trend, that is your friend, and you've marked the territory from where the buy or the sell started from and where it went to, and then you're reading the pullback, but you want that pullback to come to any point of interest, right? It cannot just, well, most of the times, at times it will do that. So you don't want to give any thought to that, where patience comes in, where you wait for your trade, where you wait for your edge. We'll talk about that as we go forward with the course. We're almost, near to the ending. So we're putting everything together right now. There are a couple more things that I want to throw at you guys that are going to help you understand and trade better. Anyway, so the point is that it's not gonna, most of the times, more often than not, it's not gonna turn around from midair, right? There is gonna be some area that is gonna trigger the price and deliver it higher or lower. There's always gonna be some area, most of the times, okay, if not always. So it can be on any time frame, to be honest. What I like to do is that I continue to go down time frames. Basically, most of my entries are in 15 seconds, and we'll discuss that too, how I get to that point from starting to 60 minutes going down to 15 seconds to getting on the entry. We'll discuss that furthermore. So you want to figure out the areas of interest that we have discussed, right? Either a supply or demand zone, or where the money's stuck, or a support equal resistance. It could be either or. But it has to be a point of interest, right? Where you see the price hold for a little bit and then break out. Okay, so once you've figured that area out and you're watching the pullback, you're marking your lower time frame territories. If it's a buy, the sell is coming down as a pullback. You're marking your miniature territories for sellers, and once the price reaches the point of interest, that is where you want to start looking at the price very carefully. So as we've discussed in the previous videos, what you want to see is, for you to get really interested in a trade, is what you want to see is your bigger player come back, or what we call in the industry a break of structure, right? We've discussed it in the previous video. What you want to see is your higher time frame come back. Okay. Now, when the higher time frame comes back, it's generally, not always, it's generally not just going to continue to go. And then comes a very important phase of your trading strategy, if you may call it. Then comes a very important stage of your trading strategy, and that is, I'm going to type it down. um, so that it's, you know, more visible to you guys. Oh, this is the highest text we can get. Anyway, okay, let's forget it. I will just type it in the middle here somewhere, and we call that the test phase. Okay, this is a very important phase of the market. What does it mean? For what does it mean? Test phase, right? What does it mean? You might have heard of the terminology where people are trading break and test or break and retest. It's basically after your higher time frame comes back, the opposite party comes back to test the potential of your bigger player, if it's true or if it's false. It's false. Okay, if you're confused, I'm gonna explain it furthermore. Okay, let's get this done here. Okay, make a mental note. If you want to take a screenshot, you want to write it down, paste it in front of your workstation or whatever. Just keep these things in mind, right? This is as simple as it can get. We'll add a couple more things to it in the future, in the next videos. But as of right now, this is your checklist, what you want to look at when you come to your system, when you come to your workplace. All of this that you see in front of your screen, all of this is what you want to be aware of before you start to get interested in a trade, right? So your high time frame is back or not, you know, let's talk about this. Let's talk about this in theory. Okay, here we go. There used to be something that I was using. What do you call it? A path. Okay, here we are. Okay, let's talk about the higher time frame. So you've determined that I'm sorry, let's talk about an uptrend. You've determined that the price is making higher highs and higher lows. It's in an uptrend. You've marked your territories. This is where the buy started from. This is where it went to. Anywhere in between, as we've discussed before, is this buyer's playing field, right? You're a buyer. You're not a seller. Okay. Now, the lower highs, lower lows are starting to come in. The price is pulling back, pulling back, pulling back. And as it reaches the point of interest, this happens. Now, to some extent, as we've studied before, this more or less means that your bigger player is back, right? Now, what is the test phase? What you want to see is, are we going to start an uptrend now? Okay, the first thing to keep in mind is that the test phase should be slower in momentum in comparison to your bigger player coming back, right? This is the first thing you want to keep an eye on. Of late, the market's been, you know, a little strange. It's not been testing properly, but there are still tests, right? So there are generally going to be two tests. So the first one is probably going to let you know that the bigger player is back, because if we are talking about a buy, you have multiple checklists, multiple confirmations of your bigger player coming back, right? You have the break of structure, and as we've discussed before, if you want to go back with the uptrend, an uptrend is a higher high and a higher low, right? Or the price in a pullback, the price failing to make a lower high and lower low. So until this point, it kept making lower highs and lower lows, where it came back to make an equal high, and the next thing you see is a higher low. This is a very good sign of the price wants to go higher again. But why do we generally wait for two tests? The first one is for more confirmation on, okay, he's back. But as we've discussed before, if this buyer is going to make money, he's going to bring in sellers. He's going to bring people to the sell side, the retail traders to the sell side, so that he can make money off of those sells while he buys into those, right? So the price, if there is two tests, okay, keep that in mind. If there is two tests, generally, the second one, after you've established your first high and low, the second one can be aggressive. It can be aggressive, and it can poke below where the smart people are getting in and putting their stop losses. So what happens when the price aggressively comes down? If you're in a buy, when the price aggressively comes down, you're panicking, right? It's not a buy anymore, it's a sell. But you're still in the trade, your stop loss is there, you're holding on, hanging with the thread. But you have your fingers crossed, you're praying, and blah, blah, blah. As the price is coming down, you're still a buyer. Let me just clear all of this, and then we'll draw it again. Because it's so haphazard at the moment, right? It's so squiggly. Okay, let's take it from here. All right. So the pullback is coming down. You have your bigger player come back, and the first or the second signs of the price wanting to go higher. You have a break of structure, you have a higher low, and then the aggressive sell comes in. This aggressive sell, as people are getting in buys here, with their stop losses below the visual area where the bigger players come back, as the price comes down, takes your stop losses, whoever was in the buy, his emotions kick in, and they turn to the sell side, right? So initially, for your stop loss to hit, for your trade to close, if you're in a buy, when your stop loss hits, it means you're selling, right? So there are sell orders down here that get triggered, and as you already were in a buy trade, you've had a loss on this, your emotion kicks in. That happens to the most of us, 99% of us. Your emotions kick in, and as it takes your stop loss, you start to hit the sells, because if it was a buy, why has it taken my stop loss? It's not a buy anymore. It's a sell. I'll get in on the sell. So the buy orders that were in place already with the stop losses, as the stop loss gets triggered, they turn into the sell orders. I mean, they're selling, right? And then there's more selling happening as your emotion is getting involved, and you've already made a loss, and you want to recover that loss, but it's not a buy anymore. You get in on the sell side, and then as it comes down, changes everyone to the sell side, it goes for massive buys. Okay, this is your general test phase, right? So the price is coming down to test as it wants to see as if how much water does this person or the higher time frame buyer is holding, right? How much power he has. Now, it's not necessary. I'm sorry. It's not necessary that once you have a failure to make a lower high, it's going to be a buy. No, you don't know if it's going to continue to go down. That is why we prefer a higher low before. If you talk about the sell side, a lower high, right? Let me just try and draw it in here somewhere. Okay, here we go. So for the sell side, the price comes down, goes down, starts to pull back, pulling back. It does not necessarily mean that your bigger player's back. That is why you gotta see the price fail to go higher. You don't know if it's going to continue to go higher. So as the price is coming back up, you can't just hit it here with your stop loss up there. You got to have more data to confirm your bias. Once you have this, the price comes up again. That's obviously where you can hit it. Okay, so that is generally what I look for, multiple tests, because that is more confirmation on the price wants to go the direction you're looking at. At times, what happens is that as the price is coming back for the pullback, right? Let's talk about the sell example again. As the price is coming back for the pullback, goes up, and breaks below your previous territory. It breaks below your previous territory, your miniature territory, right? And that is when what you're probably looking at is these areas. We call this because the logic of this is that if it's an equal low on the sell side, if it's an equal low, that means there's still power with the buyer who was buying in the pullback. But if you have a lower low, you've completely broken the structure, or in other words, you've completely taken over the miniature territory of the buy side. So if the return of your bigger player goes lower low in this case, or higher high in a buyer's case, then you're looking at your nearest support equals resistance to go lower or higher. Let's do a couple quick examples on the charts, and then we'll go through. We'll move to the next video where we're going to discuss some other examples of the test phase. Okay, so you've established the fact that overall, let's take a look at this recent example. Okay, you've established the fact that overall you're a seller, right? The price has been making lower highs and lower lows. It's gone through this massive buy, and of course the momentum on the buy that is coming back up is slower than how it came down. Now, as it's going up, it picks up momentum here, and as you can see, right, that the price is just doing one attempt of higher highs and high lows, right? At this point in time, everyone is a seller. With this sell, support equals resistance, the price is just coming up. Everyone is a seller trying to hit sells here, trying to hit sells here, trying to hit sells here. But then another aggressive buyer comes back up. But remember, you're still overall in a seller's downtrend, lower high, lower low. And as we have discussed before, the psychology of having to turn people into the opposite direction in the markets is what's more important to the bigger players. Now, we're reading our pullbacks on the 15 minutes. On the 15 minutes, there's, the pullbacks coming in. It goes higher, turns everyone to the buy side. And this seller that comes back, right? It's putting in higher highs, starts to put in higher highs and high lows. The seller that comes back, and then the price tries to go higher, it puts in a lower high. Okay, now bringing everything together, overall, you're in a downtrend. The pullback initially was very weak, very choppy. The momentum is still with the sell side. Then an aggressive buy comes up, but then it sells again and starts to hold again. So this little thing that you see, this is the test phase. The price is testing if the seller is true or not. In this case, you can clearly see you have a lower high. And the next time the price comes up, you can hit it here with your stop loss up there and the price goes down. Let's do a quick example of the buy side. Maybe we can find something on the same chart. Just give me a moment. And if you're still confused, okay, we'll talk about that in a bit. Let's just do this example first. Okay, here we go. Now this is coming from a range. By example. I'm trying to find an easier example so that you guys don't get confused. So bear with me, okay? Okay, here we go. Here we go. All right. Okay. So now, after we've established that we're in a higher high and higher low sequence, the pullback is coming in. Let's mark this area. Let's go to 15 minutes and take a look. Oh, okay. Where are you? Where are you? Where? Okay, we're almost there, I think. Come on, dude. What? What? 20,000 bats is the limit of. Shame on you. Okay, let's go into the replay mode, and then we'll be able to see it right. Okay, here we are. Let's go to 15 minutes. What's wrong with this? Okay, there we go. All right. Okay, so we've established the fact that we're in a higher high, high, low sequence, and the pullback is coming in. Choppy pullbacks, buyers still in control. You're starting to mark your miniature territories. Let me zoom in a little bit. You're starting to mark your miniature territories, and this is your lost sell territory where this buyer tries to go higher high, right? So basically, this is probably your bigger player coming back. Now, what you're looking for afterwards is multiple high lows on this, right? Starts to range, doesn't go anywhere, starts to range, multiple high lows here. So people are getting in on the buy side with their stop losses somewhere below this or here. So this would be then your first test phase after your bigger player is back. And then the aggressive sell that comes in is to entice people to join in on the sell side. But as you know, the overall direction is to the buy side. So what mostly people refer to as manipulation, it's not manipulation. It's just sending the masses to the opposite direction so that the actual bigger player can make money. That's it. So after your bigger player comes back, you're waiting for something to show you that the price is failing to go lower, and then an aggressive sell comes in that turns everyone into the seller, takes out stop losses, people are starting to get in on the sell side, and then the bigger player makes money. Okay, now if you're confused, we're going to go over some more examples of variations on the test phase as we move forward in the next video, right? Cheers.